Okay, what's up YouTube? So I want to take you through the trades that I took today, and I actually ended up taking two trades today, so I'm going to walk you through both of those. Now, the first trade that I took and the main trade that I was focused on was Stitch Fix, and we can see here Stitch Fix reported a quarterly profit of 9 cents per share compared to consensus forecast of 20 cents per share loss. So right there, they had expected a 20 cents per share loss, but it ended up with a 9 cents per share gain. So that's a really positive piece of news. And this is an earning report primarily, guys. And earning reports are a common piece of news that I trade and that a lot of traders trade because they're predictable. People know how the stock will react depending on what the earning report says. And then if we read on, the online clothing style company also reported better than expected revenue and recorded sequential quarterly client additions. So the revenue was better than expected and they added new clients. So that's positive as well. And then on top of that, they announced the hiring of Dan Jada from Amazon as their CFO. So that's another piece of positive news. And this was reflected in the fact that the stock was up 35% pre-market. And this was actually an hour before the market opened. So when the market actually opened, it was up 42%, which is an incredible amount for a stock like this to be up. Because bear in mind, guys, this is not a penny stock. The market cap for this stock is 5.18 billion. So it's a decently sized stock. So to have it up 42% pre-market, that is very unusual and that is significant. And the other thing to note was the volume. The volume on this stock was 833,000 right before the market opened. And it's a $50 stock. So there was a huge amount of volume. It was up a lot. And so I knew one way or another, this was going to be a hot play today. So that was the stock that I was focused on. Now, the other thing I was paying attention to before the market opened was, if we look at this daily chart for Stitch Fix, we can see right here at this point, this is the all-time high resistance. And I have that marked in at 52. So I knew that this was going to be a key area. The stock, I think, opened up around $50. We'll see that in a minute when we go over to the broker. Or, yeah, around that. So I was looking at this 52 area. And the idea was, if the stock showed that it was failing to break past this point, then this was a potential short. Because even though the news was really positive on all fronts, it was up so much. So it was overvalued, in my opinion. And if it can't break this key level of resistance, then the likelihood that it's going to sell off is quite high. And a lot of the people that bought it pre-market and drove it up that 35%, they're going to take their profits then, and the stock is going to drop down, and you can profit from that drop. And then on the other side though, if it showed that it could break this area, then that was a potential buy for me. So that was really what I was focused on. Can it break this area, or is it going to fail to break this area? And based on that, I was either going to buy or sell the stock. So let's go over to the broker now and actually look at the trade. Okay guys, so here we are looking at Stitch Fix. The market's about to open in 15 seconds. So again, to note, it's up 42% at the moment, plenty of volume, and it's hovering around that $51 mark. And again, the $52 mark was really key for this stock. So depending on how it reacts to that, I could either go long or short. So we're open now, and you can see initially a little bit of selling. That's to be expected with a stock up this much. But immediately the candle starts to turn green and starts shooting up. And you can see now it just smashed through 52, and as soon as I saw it smash through 52, I immediately decided to jump in. And at the exact moment I jumped in, it spiked massively there. So I might have got a bit unlucky on my entry there, but the fact that it spiked so much just shows you that so many other traders were jumping into this stock as well as soon as I saw it break that key area. So now I'm just in this range function here, so I'm going to enter my take profit and my stop loss. And I have a 2% take profit and a 1.6% stop loss. So by entering that into the range function, it'll automatically sell this stock should it hit my target or should it hit my stop loss. So that just takes all the pressure off me, and I can just sit back, relax, and watch this stock play out. So right now it's hovering around this 53.50 mark, which is fine. That's probably just because the people who bought pre-market, you know, they're going to be covering their positions. As soon as they're out of their way, I was expecting the buyers to take over and drive this stock up a little bit higher, just because it broke that key area so easily, and it's well above it at the moment. So now I decided to just draw in my take profit area, and then also obviously draw in my stop loss. So you can see this is quite a tight range, because this stock is very volatile today. But the buyers are coming in now, and you can see it just hit my take profit. I made 2% on that stock, and I traded with just 1,500 small amount, so that was $31 in this case. That was my trade on Stitch Fix, guys. Now the second stock that I ended up trading today was NIO, and there was no actual news surrounding this stock today as far as I know, but this is just a really hot stock lately. It's in the EV sector, the electrical vehicle sector, which is a really hot sector at the moment, with Tesla obviously leading the chart. So I knew that the $47 area was a key area for this, and if it could hold above that, this was a potential long. So this was just a trade based solely off price action. Now generally speaking, I don't actually like to trade twice in one day, because the likelihood of success on your second trade is always going to be lower than the likelihood of success in your first trade. But I was just paying attention to this, and I saw that it was just refusing to go below that 47 area. It had gone below it, but the buyers had pushed it back up above. So that showed me buyer strength. And then once I saw that this was starting to turn green, it's just kind of hovering at the moment, so there's still a lot of uncertainty as to the direction that this wants to go. But we are seeing buyers coming in holding this above the $47 area, which is a good sign. And then once I saw that spike there, I jumped in, and I may have jumped in a little bit prematurely here, but it looked quite good to me, so I jumped in on that. And again, I entered my range here for my take profit and my stop loss. And I was a little bit concerned here when I saw that the candle had started to turn red again. Would have liked for it to keep pushing up straight away. But that was a bad sign for me. But as long as it stays above that $47 area when this candle closes, I was pretty sure that I was going to be okay. Now if this 5-minute candle were to close below that 47 area, I'd watch how the next candle opens, and if it's showing that it's going to continue selling off below that area, I probably would have just exited this position and taken a small loss here. But generally speaking, like, I trade on the 5-minute candles, and the way the candle moves in the closing 10-20 seconds before the new candle opens, obviously, that tells you a lot about the direction that the stock wants to go. And so even though this did break below the 47 area after I entered, coming up to the close of this candle, it's pushing up above it. And we got a decent close there, well above the 47 area. And immediately this candle here starts to turn green, showing buyers coming in, which was a good sign for me. And now it broke above the open, or the high point of that first candle, which is a good sign. But paying attention to this, I didn't really like the way that this was moving, because even though it had showed a certain level of buyer strength, it was kind of struggling to push up, and there was just constant selling coming in, holding this down, which can be a bad sign. So I decided to take off my range function, and earlier on you see I marked in a second line there, and that's just the 1% area. So because I don't like to take 2 trades in one day generally,
and I had a good trade on Stitch. I decided that if this would hit that 1% area, I was just going to not be greedy, take my profit and exit and walk away from this stock. And again, even when it is pushing up and it's showing a certain level of buyer strength, it's just constantly being stomped back down, which is, it's kind of worrying when you're in a long position. And this stock was up quite a bit. It was up 5%, 5.4% at this stage, which I mean is nothing compared to the stock that we just saw, Stitch Fitch. But considering it had no real news surrounding it, that's quite a lot for this stock. So I just wait a little bit longer here. It's getting up to that 1% mark. And there it hits it. I hit sell. I got a bit unlucky. It pulled back right when I hit sell. So I made a little under 1% on that stock, but that was fine by me because, as I said, I don't really like to take two trades in one day. So I was quite happy to walk away with nearly $40 on the day, 3%. It actually did end up hitting my 2% target. So I could have stayed in this stock longer, but you know, I was happy to just take the 1% and not be greedy because there was no real telling how this stock was going to play out, and it easily could have gone against me. So I think it was a good idea for me to not be greedy and to just get out of my position and walk away with my 2 green trades for the day.